Okay, now let's look at the exact binary option strategy for us to get a trade. So the first thing we would be looking at is we'll be looking at how we identify a strong support zone. Yeah, this is the strong support. That's what we'll be looking at. So to identify a strong support zone, what do? We, excuse me, to identify the strong support zone, I've said it earlier on how we can do that by, why is this like this? Okay, we can do this by let me draw the support. For instance, we have a zone like this, a candlestick, sorry, a candlestick pattern going in a downtrend. I've said this before, but I'll do it again. This, and this. Now we have an opposite candlestick that is going to form the supply. We have this opposite candlestick here. Let's say 1, 2, 3. Okay, 3. And then we have another one candlestick that is going to start the aggressive move downward, like this one, like this. Oh, you know, this can be small as well, a small candle like this, and you have this, and you have this. Now you've seen this happening. Now where is our support zone? For this kind of, in this case, you've seen these two candle how they went and take over this one. So our support zone will be, okay, for instance, there might even be a wick here. There might be a wick there. um there might be a wick in this candle. Let me put the wick so that we get the full scenario. Okay, so we have this kind of wick here. Yes, we have this wick and we have something like this. So how we draw our zone now, we use this one here, we use this wick here, right? And then we use this wick here, we use this wick here, exactly like this. Now what we want to see at this phase stage is maybe the candlestick still comes down a bit. Yeah, it's possible it comes down from here. Oh, sorry. Possible it comes down like this, it comes down like this, and then it goes up again. This is just to create the picture. It goes up again like this, like this. It may come down one more time. You know, it's not just a textbook example. You need to make it look as realistic as possible. It may come down again like this. Now coming down again like this is even showing you pressure from here, and then it goes up. It goes up. Now we have identified the path. We have waited for the price to go up. That is number one and number two. Let's say it goes up here. So identify strong zone. We've identified it. When we mark this, wait for price to return. We wait for price to return. So what do we do now? We look for what? Confirmation candlesticks. We look for confirmation candlesticks, and one of those confirmations candlestick is the pin bar or rejection wick. So we have pin bar, something like this, the next candle like this, and we have a rejection wick, something like this. Yes, this is what we want to see. Now we have this. We might also have something like an engulfing candle, whereby after this candle we have a pin bar and an engulfing candle in one, like this. Oh, sorry. We have this. Yes, engulfing. This add more confluence. We can also have a doji. We can have the hammer, the shooting star. You just see those candlesticks here. Now this is what you actually need. When you get something like this, yes, you are in the right track. So you put this in mind that this is what you need to see. You need to get the downtrend. Remember, this is the downtrend, the major trend, which is the 20, 200, 150, and 20 are all above these things. You understand? So this is how you do the first one. And then after you do that one, we go on to the next, which is what? The accuracy filter. Okay, so you need to filter your trade. And how do you do that? By one, going with the trend. Like I just said earlier on, you go with the trend, trade with the trend. How do you trade with the trend? By using your EMAs I told you before, or your lower lows, your lower highs. This is very simple. For instance, a downtrend, you have to see the 200 EMA like this, the 200 like this going down. We all know. You will see the 100, which is the brown. See it like this. You see the 100 like this. You see the 50, like, which is much lighter than the brown. Let's say something like this. See it here. And then you see the 200, which is, sorry, the 20, which is the yellow. See it here. You see it here. Then that which I've just shown you just now, you see it at the bottom. Now you can now see that the trend is supporting it, right? So you're going with the trend. After you draw your demand zone, then you know you are having the right filter to go ahead with the next step. Then you have to avoid the zone created inside range. So if we can think about this, how do we avoid zone created inside range? How do we identify a range? A range market is like this. A ranging market, you see the EMAs going like this. You see it going like this. You also see it going like this. I know I've told you this before. You see them going like this, and you see the EMAs. They are interwoven. This is how you know a ranging market. Now, if you see a price in between, you avoid. So this is how you avoid trading inside a range. You avoid it. Avoid zones created inside the range. The third one is do not trade when it has been touched multiple times, just like the example I've shown you. And I'm sure you all know when you are trading with the zone, for instance, you're drawing the zone from a higher time frame. Yes, you can trade it when it touches it like 3 4 times, but in the time frame you are trading and you are using that time frame for expiration, just trade once and then leave it. And then you avoid high impact news. High impact news, they come often in the market, London, New York, and Asian section. Recently, we just saw how the crypto market crashed, and that is an example of how the high impact news affects the market and it resets the market. So during time of high impact news, price action, support and resistance, your trading strategy stops because the market is trying to reset itself and then start new moves. So you need to have these things in mind so that you know when to trade these strategies and when you have to avoid it. If this is your first time here, please do wait to like, share, and subscribe as we move to the next step. Now, the common mistakes we are going to make if we don't do these things, if we don't use the accuracy filter, is that we are going to end up trading on weak zones. Yeah, we are going to end up trading on weak zones. And by weak zone, I'm talking about those zones that we do not really that are not really demand zone. We just form those zones in our head, or zones have been touched so many times. We get those zones, we draw the zone, but we don't wait for confirmation. Like I told you, you need to see these candlestick patterns for confirmation. You need to understand the moves that the market make at this zone. And if you don't understand those moves, you will be trading too early. And one of those moves is rejection. The other one is the fake breakout, which is the liquidity hunt. And the third one is how the support turn into resistance. If there is a reversal, why the trend is coming back to the demand or supply zone. Now, you're using the wrong expiration time is a common mistake as well. For instance, you are trading in the 1 minute you're trading in the 1 hour time frame and you're using a 1 minute expiration. No, you should use a 5 minute expiration or 15 minutes expiration. Yes. And if you are trading in the 1 minute time frame, you can use a 1 minute expiration, but if you go down to your lower time frame, like the 10 seconds, then you can just enter there and it will give you automatically a good expiration. Trading during news, like I explained just now, the market becomes too volatile, so you have to avoid trading at this time. Now, drawing your zones too wide or too narrow, it simply means you don't know where to put your rectangle. Too wide or too narrow means you don't know what you are doing. In other words, for you to avoid drawing your zones too wide or too narrow, you must know how to identify the zone. Once you know how to identify your zone, you won't be making this mistake. And using zone already touched many times. Yes, I told you this before. When the zone is touched too many times, you just wait for the change in polarity, whereby that supply or demand zone flips to become the opposite of what it used to be. So this is what it means to have some mistakes in trading. There are common mistakes. Everyone makes these mistakes. I myself, I make these mistakes as well. So the last step is to let us identify the steps again. You identify the trend like I told you. Major trend, 200 EMA, 150 and 20 EMA all aligned. Oh, what happened? Excuse me. Okay, I got it back. Major trend, the 50, the 20, the 200, and the 50, the okay, let's do it again. The major trend, identify the trend. You can use higher highs, higher lows, lower highs, but then you can still use the EMA, the 50, the 20 EMA, the 50 EMA, the 200, the 100, and the 200 EMAs. You can use them to identify the major trend. You mark your supply and demand zone. You know how to mark your supply and demand zone. The base candle, either the base candle from from the downtrend, the base candle from the uptrend. You take the top wick and the bottom wick of that last small candle. That last, it should be a small candle that starts and then the big candle starts the trend. That is where you take from and you draw your demand or your supply. Now, the next thing you do is to wait for price to return to where you just drawn. You wait for price to return to the zone that you just drawn. When you return, you look for confirmation candlestick. How do you look for confirmation candlesticks? Through the rejections, through the fake breakout, and through the how do you call it? The rejection, the fake breakout, and then the change in polarity, whereby support turns into resistance and vice versa. Then you place your call using the proper expiration. I've explained that. And when you can do this, you find out that at the end of the day, you stayed disciplined. This is what discipline means. If you can do this even once every day, I bet you by the end of a month, you should have been strong using this kind of strategy. So please, if this is your first time, do well to like, share, and subscribe. If you have any video suggestion you would want me to explain, please leave that suggestion in the comment section, just like a subscriber left this video suggestion in the comment section. I hope you understand. If you want me to go deeper on this topic, or if you are not comfortable with the style of teaching, just let me know so that I improve in it, because for some time I haven't been trading because I had problems with my YouTube account, but now it's back again, so I can use it to trade. So until next time, I want you to take care and bye bye.